Right. Welcome to yet another Do Your Own Research episode. And today we just want to discuss a super interesting topic. Bitcoin spot ETF has finally been approved. And this time it's for real. So we just want to, talk about what is a spot Bitcoin ETF. Then we'll look at the pros and the cons and get to understand everything about this topic that has been causing headlines everywhere in the Bitcoin community, in the blockchain community, and generally in the financial ecosystem. It's such a big news. Yeah, it's such a big news, and I think it's important that we get to understand what we mean by what Bitcoin ETFs is. So, a spot Bitcoin ETF, yeah, we've seen the crazy tweets about the SEC account being hacked some time back, and then finally it got approved. Now, a spot Bitcoin ETF is just exchange traded funds. So, what this means is that it's an investment vehicle that now allows ordinary investors exposure to the price moves of, or rather, the price movements of Bitcoin in their regular brokerage account. Now, what does this mean? It means you don't necessarily have to own the actual asset Bitcoin, but you get to trade it on your local brokerage account. Yeah. So so unlike the Bitcoin futures ETFs, a spot Bitcoin ETF invests directly in the Bitcoin as the underlying asset and not derivatives contracts based on their prices. So that's what spot Bitcoin ETF actually entails. So in this episode, we'll just talk about some key takeaways. So the very first takeaway is what I've just spoken about. Uh, Investors can invest in the spot Bitcoin ETFs as a more accessible and regulated means of tapping into the Bitcoin price movement. Yeah, so it's open to all the investors. Then, so unlike other future-based ETFs, a spot ETF would own actual Bitcoins. So that was what I was talking about. So you're trading actual assets, unlike the derivatives where you're trading actually contracts, futures contracts. Then of course, enhanced liquidity will also facilitated by spot Bitcoin ETFs is something that could could lead to more stable prices. So imagine all the brokerage, or rather all the investors can now be able to access Bitcoin. I think this will bring in a lot of liquidity in trading Bitcoin as an asset, even in your local or other traditional brokerage firms. Then now another takeaway, of course, is now the regulatory frameworks, rather approval of these spot BTC ETFs. It's something that is still pending and it's crucial. So now, of course, spot Bitcoin ETFs offer regulated and accessible ways for mainstream investors to invest in the digital currency. So let's look at how this works, how spot ETFs actually work. Now, you remember when I said that now you own actual Bitcoins? Yeah, so what happens here? Um, what happens is that now the spot Bitcoin ETFs securely hold Bitcoins in digital vault. So this vault is actually registered under custodians who will manage it. Now, the purpose of this kind of ETF is to mirror the actual price of Bitcoin in the actual price of Bitcoin in the crypto market. So, what happens to get started? The ETF, the electronically traded funds, buy the actual Bitcoins from other holders or even the registered crypto exchanges. Then these tokens are stored in they're stored in the digital wallets. So once they are stored in the digital wallets, which are safely secured from hacking or any other thing. Yeah. So once that is done, I think the next step is now the ETFs are then issued, or rather the ETF issues them to the corresponding set number of bitcoins it holds. So that's what happens in now trading of these ETFs. But now before that happens, the process of creation and redemption is done by authorized participants, or rather the APs. So these ones are very large financial institutions which create or even redeem the shares of the ETF based on the market demand. So it depends on how the ETFs are traded. So if the market demands, or rather if the ETF shares are trading at a premium or discount to the actual price of the bitcoins, then this allows for arbitrage trading. Let me use an example to simplify what arbitrage is. I'll use a simple example. Suppose probably I'll use a local commodity. Let's take an example of probably a laptop. Yeah, so suppose I discover I can buy a laptop in shop A at $50,000. 50,000 shillings, Kenyan shillings probably. Then I discover that shop C lists it at 54k. So this can allow for arbitrage. I can buy at shop A and list it at shop C at a higher price. So that's basically what arbitrage is. Now let's quickly demystify, rather look at the difference between now spot Bitcoin ETFs versus other Bitcoin ETFs, or rather the derivatives. So before I go to that, I just want to shout out one of a really knowledgeable guy. He's called Clement. He also has his own stuff he's doing, especially in the forex world. So check out Clement at Unfiltered Forex. He has podcasts, Unfiltered, and also his YouTube. So I'll link them down in the description notes. He explains really nicely on what derivatives are and everything to do with trading that are very much related to now the spot Bitcoin ETFs. So you can check him out and get a bit of knowledge on that. So anyway, let's get back to comparison between spot Bitcoin ETFs versus other Bitcoin ETFs. So at the beginning of the episode, I gave a rough, rather a brief description of what spot ETFs are, spot Bitcoin ETFs are. Now, the spot differ from the derivative-based ETFs in how they are structured and how much exposure they offer to the Bitcoin price changes. Now, remember, um, yeah. So just remember that the spot ETFs have direct ownership of Bitcoin. This is actually the major difference. And for the derivatives, Bitcoin ETFs, they are mostly uh, futures. Yeah. So we know that futures are contracts. So by contrast, derivatives-based ETFs can be more opaque for investors, given that their value is derived indirectly from the futures contracts. This can be influenced by so many market factors beyond even Bitcoin's spot price. So spot Bitcoin is the exact price of Bitcoin at that time. So if Bitcoin is 46k, spot Bitcoin ETFs reflect the exact 46k, unlike derivatives that can be affected by so many other factors. So I broke down some of the major differences. So for example, the underlying assets. The difference between spot and derivatives is that spot Bitcoin, the underlying asset is just the Bitcoin itself, the real Bitcoin, while whereas in derivative based ETFs, it is now the futures contract of the Bitcoin. Uh-huh. Price tracking is direct in the spot Bitcoin, like I mentioned earlier. So if Bitcoin is 46k, spot Bitcoin ETFs reflect 46k. But now in the derivatives, it's It's indirect, sort of, because of so many other factors. Then also about probably things like transparency. Spot Bitcoin ETF is transparent because it is actually reflecting the actual Bitcoin held, whereas in the derivatives it's a bit indirect because they dependent on the derivatives rather the futures contract. So on stuff like probably now the regulatory frameworks, the derivatives is pretty established because it has been in the game for so long. So the regulatory frameworks are super established and really nice. Whereas now for spot Bitcoin ETFs, it is something that is evolving. It was actually approved a few hours ago. So that's why it's not super established right now. So yeah, so those are probably the major differences between now spot Bitcoin ETFs and mm, the derivatives ETFs. So I just want to pose a question to the listeners. Do you think probably spot Bitcoin ETF approval is something that is good, or rather will add value to the ecosystem of not just Bitcoin but the whole blockchain ecosystem? Because now big players are coming in with huge amounts of money. So I don't know. It's now upon you to answer that question. If you think it's really nice for the ecosystem now that it has been approved. So uh, probably other. So yeah, let's look at which ETF applications were approved. So there was a total of 11. The SEC approved the following 11 spot Bitcoin ETFs. They were BlackRock's iShare Bitcoin Trust, Grayscale Bitcoin, ARC 21 Shares Bitcoin. There was Bitwise, there was Wisdom Tree Fund, there was also Fidelity Wise Original Bitcoin Trust Fund, Van Eck Bitcoin Trust, Invesco Galaxy Bitcoin ETF, Valkyrie Bitcoin Fund, Hashdex, and Franklin. So these are very large players, financial players. So they filed and it was approved. So let's see what happens probably in the crypto industry. So yeah, so major takeaways, rather speculations, is that this ETF will bring a very large inflow of capital probably in the crypto world. So crypto, I think, is still so young. Um, Out of a billion, I mean a population of 7 billion on planet Earth, I'm not certain if probably 500 million people know about crypto and Bitcoin. So I think once this population, just even half of that 500 million know about crypto and Bitcoin, it will lead to also mass adoption. So I think spot Bitcoin ETFs might increase uh, adoption, especially to now traditional investors, because now it's available to trade with their local brokerage without necessarily going through the task of owning wallets and all that stuff. So number one is I think it will bring in mass adoption. That's just a speculation. So you just do your own research. Uh, Liquidity, I think liquidity will not be the same. There will be high inflow of liquidity. Then thirdly, it will allow for people to participate also in trading Bitcoin, because now the technical bit of owning wallets, uh, private keys and all that technical stuff will is actually left to now the person that actually owns the Bitcoin. But you as a trader, you don't necessarily have to have the know-how. So this one will also simplify for investors who don't have the technical know-how in the blockchain and crypto space. Yeah, so there's been a lot of fuss online, especially on X, formerly Twitter. There was a lot of activity and hacking here and there, false announcements. But finally, it is here. And uh, okay, for me, I don't know if you yourself you're happy or you're a bit skeptical about this. So there has been a lot of divided, though it's just a few hours old. But yeah, for instance, the SEC did not approve or endorse Bitcoin in as much as they approved the spot BTC ETF. So yeah, you can see there's still some kinds of mis. I don't know how. I don't want to misquote anyone, but yeah, in as much as they have approved spot Bitcoin, they are still not endorsing Bitcoin. Yeah, and BlackRock is the world's largest asset manager. So let's look at some of the fees of some of these few that were approved. BlackRock will charge 0.2% fees until the fund reaches probably $5 billion in assets. So this data is courtesy of shout out to Cointelegraph. You can just find the data there. Then Bitwise Bitwise follows behind with at 0.24%, while ARK21 shares and Van Ark trail slightly at 0.25 fees. So yeah, so ARK will actually waive all fees for the first 6 months until the product reaches $1 billion. Yeah, so this is something that we look at in a later episode to understand what this means, what these fees means, and why they are probably charging such fees. So in the next episode, we'll look in depth on what this probably means to a local trader, or rather the brokerage uh, people who are using their local brokerage. Yeah. So there isn't much to. I think it's now known almost everywhere. The news is everywhere about spot Bitcoin ETFs being approved, and I just wanted to make this episode to give us a sneak peek of what Bitcoin electronic traded funds actually mean. And we have looked at some of the pros and the cons. And some of the pros, of course, are liquidity and mass adoption. So the cons, of course, let's look at a bit of the cons. So there is still not much regulations about this. So that is a major difference, rather a con sort of, because of the uncertainty in regulations. So for probably people who are into Bitcoin and crypto, I think it's also a con because now, mm, well, if you read the white paper of Bitcoin, the major idea, of course, was to decentralize Bitcoin as a whole. So decentralizing actually means giving back the power to the people, the power of their money. So well, we'll see how this pans out in the near future. Yeah, so I guess that's the end of this episode. It was a brief one, so watch out for the next part where we'll now delve deeper into what spot Bitcoin ETFs really will mean to the traders. We'll look at the fees and probably sample some of the uh, large corporations that were approved. Yeah, so keep your remember, not your keys, not your coins, of course. Keep your keys safe. The keys to your wallets holding your Bitcoin safely and trade safely. So just a disclaimer: none of this is a financial advice. Of course, it's based on my opinion, and hence do always do your own research. So see you in the next episode, and remember to follow me on X, on YouTube, and all the social media that I'll post in the episode description. Yeah, see you around, and have a nice trading now that spot Bitcoin case has been approved. Yeah, goodbye.